Market review for October 3rd, 2018. First, let's take a look at the new sentiment review today. Dow closes at a 52-week high with less than 50% of New York Stock Exchange stocks above 200-day moving average. The chart is now shown on screen. If you look at prior incidents of this phenomenon, we can see that back in 1999, 2000, there were several dots. And then back in 2008, early 2008, another incident. And then today is the third time that we're seeing this. Yesterday, we highlighted that dumb money is now more confident than smart money, dating back to January. And today, we're getting divergence in under the hood stocks versus broad indexes. These are both not very good signs of the current bull market. We'll see how this one plays out. Divergence tends to occur several months before a bear market actually hits. As we can see in 2000, it took quite a while for the market to really go into tank mode. 2007, 2008 financial crisis was a little different. It marked a peak and then came the waterfall. We'll see how this one plays out this year, heading into October and November. Now back looking at the SPY. Today the market turned, gapped higher, traded above, and then fell back during the final hours. Closed just slightly higher at 0.11%, but aftermarket is not looking good, and it is making new lows from our intraday trading. QQQ, NASDAQ 100, same thing, more sideways action, up marginally at 0.11%. Bigger story today is IWM. If we zoom in a little bit, we can see that yesterday we got an oversold signal. Today the market bounced higher, tried to make a higher high and higher low, succeeded, but then closed within yesterday's range. Bulls tried to make a stance above that 200-day moving average. Continue to monitor IWM, Russell 2000, as well as small caps, IWC, Russell 3000. Here we see a similar chart as the IWM peaked in September, early September, and then almost got as far as the 200-day moving average, but then bounced back a little bit today. This is not a good sign for the broader market, but we'll look at some actionable ideas or even watch list ideas. Energy, especially natty gas, UNG has made a strong run since September, going from the lows of 22.6 to 26.8, a move of 4 points in less than a month. Great action in natural gas. Same thing, XLE, S&P 500 energy sector, bounced off of the 200-day in early September, trying to break out of this trading zone with new highs at 79.80. We'll see if it gets there. The name to play in this field is Pioneer Natural Resources. Earnings are growing at a high clip. 500% latest quarter, 500% the quarter before this one. Today, traded higher by 3%. Recaptured the 200-day moving average, signaling that this stock is ready to start a new bull trend. We'll see how this one goes. Inverse head and shoulder for about 2 months. Playable action here using long dated options or even just common stock with stop at 170 and then a more conservative stop at 160. MVIS, AR name, gapped, had a strong day today, up about 5.5%. We are able to take a position here. Minor cup and handle of only about a month and a half. We do see that volume today is much higher at 350,000 shares versus prior days. Expand this a little bit. Stochastics are hitting oversold, but if this one does get into an uptrend and hold above the 200-day moving average, this could be a strong winner again in the AR space, making waves as a small cap stock. GOOS, Canada Goose Holdings, retail stock, traded above this price range, just declining lower highs, and lower highs up until September 26th. Then the stock jumped 9.75%, but then gave back all those gains in the last 3 days. Now resting above the 50-day moving average. This could be considered a pullback entry. Can use the 100-day as a moving stop, or even a couple points below the 50-day for a more aggressive stop. Caterpillar, earnings are growing strong for this construction and mining machinery company. Broke out above the 200-day, had a minor pullback, retested the 200-day, and then today soared higher on strong volume. We do see on a longer term, we are coming out of a deep 8-month base. We do manage to get above 162 or 164. We could see a high of 172 and then break out to all-time highs from there. PE is at a 16, very reasonable for this consumer staple stock. FMC, material stock, up about 2.6% today. Volume down below is strong. We do see it recapturing the 200-day, trying to break out of this little flag formation. We're seeing this a lot, especially in the recent pullback on major indexes. We want to consider strong stocks that are resilient, that act more like ping pong balls, just ready to break out when the market is not breaking higher. Could be a future leader, especially with the strong earnings growth of 270% and then 300% in 2 prior quarters. Glue Mobile. The stock is forming a flat base at around 730 to 780. Monitor this one for a little bull flag formation, even a tightening formation. Earnings is strong, relative strength is strong, group strength is strong as well. Recaptured 200-day in February 2018, broke out to new highs in May, pulled back, got an oversold signal, recaptured. Now it's forming a base. This could be a leader because of how resilient this stock is and the strong fundamentals. NEWR, New Relic, stock that we discussed yesterday, oversold at the 200-day, bounced today of 1.87%, failed to recapture the 4-day exponential moving average. However, there is some more room to run even up until the 50-day or 100-day moving average. We can still initiate a position here with the 200-day as a close stop. PEGI, Pattern energy stocks are on a tear lately. We could see a rotation out of technology into energy stocks. PEGI bounced off of the 200-day moving average. Earnings growth is strong. Relative strength is lacking, but that's a common feature in energy stocks lately. However, if it manages to break out above 21, this is a multi-month base, so we could see higher grounds at, let's take a look at the resistance levels. 21 is a strong resistance, acted as support in late 2017. Now it's acting as resistance. Do not make an entry here, but monitor this one to see if it is able to break that 21 and move higher. ULTA, another strong stock, major winner in April till now, doing a little flag formation here for about a month. Right now it's at the bottom of that range. If it does break out above high of 290 or even break out of this descending trend line, an entry point is reasonable at about 285 or 286. That's it for today. Stay cautious, stay safe. We did exit a lot of longs today, looking for that pullback or correction based on the action that we're seeing. Divergence in NYSE stocks, divergence between small caps, large caps. Institutions are taking a note of a protection stance going from small caps to large caps. As you can see, the Dow all-time high today, while Russell 2000 just barely had a bounce of 0.88%, failed to even recapture at the close of yesterday's high. Stay cautious. If you wanted to, UVXY, minor position here, just for a little protection. We do get a break, even of 5 to 10% in major indices. This UVXY hedge can move, and can move quite a bit.